Good afternoon, welcome, and you're watching The Closing Bell. I'm Santosh Nair.
And I'm Yatin Mota.
A fairly lackluster session today. Benchmark indices Sensex and Nifty fell sharply during the day. However, they managed to recoup some of the losses even as they ended slightly lower over the previous close. As always, mid caps and small caps fared slightly better than the large caps. They also were under pressure today but did not fall as much as their large cap counterparts. And among the prominent losers in the mid cap space, mainly we had Indraprastha Gas and Century Textiles, which were down about 3 to 4%, while among the prominent gainers we had Suzlon and Welspun, which were up by about 3 to 4%. A couple of major FMCG numbers came in today. HUL numbers were announced just after the market hours, and before that we had Nestle. Yatin, what do you make of those numbers? What are the preliminary?
So if you look at Nestle, I think the volume growth was quite weak. Obviously, the icing on the cake was that the company announced the 1:10 stock split. And if you look at HUL also, the numbers which are flashing on the screens right now indicate that the numbers are largely in line with expectations. However, the revenue growth is only 3%, which means that the volume expectations of close to 4% have been missed. So this time probably HUL has posted a volume growth figure of 2.5%, which is below the street expectations. So be it Nestle, be it HUL, I think the monsoon quarter volume growth was slightly muted versus expectations for these large cap FMCG companies.
Also, Yatin, a lot of hope being built on the festive season, both from FMCG companies as well as auto companies. So, and auto, you've already seen a fair bit of run up. What's the street saying as far as auto is concerned?
So, auto, Santo, yes, the demand continues to remain strong for the new models, especially the SUV segment. However, the wait period has come down, clearly indicating that the production channel for auto companies is improving, number one, and number two, the order book backlog is no more improving. So probably there is an indication that the demand is slightly slowing and the production is probably catching up versus the case which was there for the last 24 months, where auto companies has whole host of disruptions from chips to raw materials to supply chains. So I think that issue is getting resolved, and probably autos are now normalizing towards new model launches as well as the festive season cheer, which is probably expected to get uptick in the overall volume picture.
Yatin, when you speak to most of the people in the market, they say that mid and small cap, they are almost now in bubble territory, though they don't use the word bubble. They say it's fairly expensive, and they say that clearly large cap offer better safety, but at the same time you're seeing that the outperformance in mid and small caps continue to that continues. So what explains that?
I think there is liquidity in the market. There are a lot of funds which are yet to be deployed, and Santo, still there is a lot of undervaluation in the PSU names. A few of these stocks are already moving. Today NBCC was up 7-8%. Stocks which hit a 20% circuit was Shakti Pump. They got a solar order. So stock specific action continues on Dalal Street, Santo, irrespective of the stock moves. But yes, I think the earnings season will probably lead that froth into correction territory, because a lot of hopes have been sold in the last 3 months, and now it is time to get into reality with the earnings and numbers trickling in.
That's nicely put, Yatin. But if you see again some of the companies, like for instance Titagar Wagons, that company has managed to come up with a fairly good set of numbers. So I think that has once again raised hope for other railway companies as well. Well, with that we take a look at the stocks that were on our radar this afternoon, starting with BSE. Spectacular run in the stock, and that continues. The bulls are in complete charge of the counter. The stock hit a 52-week high yet again. Now, Yatin, if you look at the quarterly numbers, if you look at the earnings top line growth, it's not been all that much. The big trigger for BSE has been that it has managed to capture a fairly decent size of the derivatives volumes. It's close to about 9% in terms of notional value and about 3% in terms of premium value. That's what the HDFC Securities report is saying. So that is what seems to have got investors excited about BSE at this point in time. But once again, Yatin, if you read between the lines of that HDFC Securities report also, it says that right now BSE is charging a transaction fee as low as about 1 basis point on option premium. So it's not making much money at this point, whereas NSE is charging about 7 basis points, which means that BSE still has some room to increase the transaction charges. but from the look of it right now, options don't seem to be making much money. And I think Yatin, the interesting thing will be when transaction charges are raised, would you still have that many participants still continuing to trade on Sensex derivatives?
But I think Santo, the point here is that every day for the market there is a new expiry. The banking derivative contracts expire on Monday for BSE. Tuesday there is some other contract on NSE. Thursday there is some new contract on NSE, and Friday there is another contract on BSE. So I think both the exchanges are ensuring that they do not overlap the indices in terms of expiry. And since expiry takes place every day in some of the other index, probably the volume picture still remains buoyant for these things. But as you mentioned, I think the key here would be the transaction charges as to how successfully BSE can pass that on to customers, because right now NSE is almost 5 to 10 times higher in terms of the transaction charges, and that is what is changing the game for BSE. And I think Santo, the market talk also is that regulator is also supporting BSE to develop the derivative market, because I think the regulator informally feels that both exchanges should grow vibrantly, and there should be no monopoly for any particular exchange on any particular product. So I think that's what's keeping BSE so high in trade. I think the market cap has already moved above $2 billion or so. So yes, from the lows, the BSE has been moving on the hope that the derivative turnover could probably change the earnings picture.
Well, your stock, Yatin?
Yeah. So Bajaj Auto is one stock which is on the radar. Today it was one of the top index gainers, gaining as much as 7% intraday. Morgan Stanley is overweight on the stock of Bajaj Auto with a target of close to 5,449. Now, Morgan Stanley believes that it was a very strong quarter for Bajaj Auto, especially on the operating margin front. Electric vehicles and Triumph, these are the two segments. One is the electric vehicle and one is Triumph, which is a premium segment. That could drive the volumes as well as profitability for Bajaj Auto. And also, if you look at the FY25 price to earnings multiple, that is almost 18 times, which is close to 10-year average. So on the valuation front also, brokers feel that the Bajaj Auto stock is attractively valued, and more importantly, the kind of dividend distribution policy that the company announced attracts a lot of long-term money.
Well, Yatin, also the analysts don't seem to be talking much about its bread and butter two-wheeler segment, which still continues to be under pressure.
Because of exports. Yeah.
Exactly. Yeah. So, any hopes of improvement on that front?
So I think the management always is hopeful that countries like Egypt, Nigeria, Sri Lanka, who have been going through a series of geopolitical changes, foreign exchange changes, and there are certain restrictions also being imposed by these countries because of the forex situation. These companies simply barred a lot of products from being imported in the country. But I think the situation is normalizing very fast, and the market probably feels that the worst is over for Bajaj Auto in terms of export markets, which still constitute close to 35% of total volumes.
The last stock on my watch list this afternoon is Chennai Petroleum. This stock too has had a fantastic run over the last few months. It's been touching 52-week highs regularly. Yatin, we had seen a big rally last year, and that was cut short because of the windfall gains tax that was imposed. But this time market really seems to be excited, and one of the big triggers driving the stock is that globally refining margins have surged, and refining capacity globally that's been a little tight, and JP Morgan had said that in a note recently, saying that globally there is severe bottlenecks in the refining capacity, because of which refining margins are likely to stay higher. Also, demand for crude has been fairly strong, despite the general perception that because of the shift to clean energy, demand for fossil fuels would be lower, but things have not exactly played out that way. So, Chennai Petroleum stock right now among the big outperformers in the market. It's also it's a mix of both trigger in terms of earnings as well as attractive valuations, because it's still quoting at about 5 times trailing 12-month earnings and less than 1.5 times book value. So clearly even the valuation seem to be in favor of Chennai Petroleum at this point.
Absolutely, and this is one company which doesn't get impacted too much because of windfall tax as well, because largely the product is sold in India itself. So the windfall tax applicability doesn't happen for their diesel and petrol products. That was about Chennai Petro, but another stock which was under pressure today was Bandhan Bank. Now, CLSA has downgraded the stock of Bandhan Bank. They've cut the target from 290 to 270 rupees per share. Obviously, this 10% kind of a target cut is because of the disappointing asset quality. Now, Bandhan Bank during COVID also had some pressures regarding the asset quality. In the monsoon quarter also we have seen the states in India wherein Bandhan Bank has most of its business got impacted because of floods, and hence there is a pressure on the overall gross NPA ratio. Now, if you look at the microfinance players, they have been witnessing improvement and have been guiding about improvement in the asset quality in terms of collection days also. Despite the fact that the industry is improving in terms of overall asset mix, Bandhan Bank continues to disappoint the street with their earnings, and probably that is the reason why this is one of the large cap banks which has been underperforming severely to its peers, be it in the microfinance space or be it in the banking space.
Overall, broadly, the appetite for banking stocks still remains fairly robust, and the big worry, according to even those who are bullish on the sector, is that too many fund houses right now own banking stocks. It's the top holding in most schemes. So, where will the new buyers come from? That seems to be the worry.
But I think, Santo, obviously that is one argument that banks are, overweight in most of the mutual fund portfolio. But we need to also remember that 40 to 45% of Nifty weightage is financials and banking stocks. So probably, as a fund house, when you're looking or replicating an index or, benchmarking yourself to Bank Nifty or any index, banks inevitably are such a large weight that the fund manager probably cannot afford having, less number of banking stocks in the portfolio, especially to give the fact that the PSU banking index is almost at a multi-year high with, most of these smaller banks leading the way.
Well, that argument cuts both ways. Once on the way down, it will still be applicable, because then they will be under compulsion not to have so many banking stocks in their portfolio. But well, on that note, that's all that we have in this edition of Closing Bell. Thank you for watching.
जुड़ने के लिए बहुत बहुत धन्यवाद. और सैंटो आ गए हैं अब, तो we'll spend 1 week with Santo and his insights. Stay tuned to Money Control.